Thank you very much, Kerry. It's good to be known as one of the smartest people in a room. Thank you very much for that introduction. And look, the UME Gold Project, which Rox holds a 70% interest in, I believe is a fantastic development opportunity that is not only high grade, but potential for long life. And at the moment, the company has a very attractive valuation. The project will produce a high quality gold concentrate, which I've got a fair bit of amount of experience in dealing with gold companies that do produce a gold concentrate, as well as negotiating the relevant offtake agreements and the like that are required. There's significant upside. The scoping study that we released only includes about 20% of the actual resource that we have defined. So what we see here is a project that we'll be able to upscale in terms of production and increase the life quite significantly. We are well funded. We've recently completed a $4 million placement plus a $1 million SPP, which closes today. So if you're a current shareholder, may I just remind you to get your applications in, because it has been extremely well supported. And we expect to reward all relevant shareholders as part of that. And it is an attractive valuation. At a 30 mil market cap, you don't get much cheaper for 3 million ounces in the ground. When we look at the management team, we got the experience of developing projects. Myself, I was previously CEO of Bardock Gold that started in a very similar position. 30 mil market cap, took the company through pre-feasibility studies, definitive feasibility studies, to an eventual acquisition by St Barbara Gold of over $150 million. With Rox Resources, very similar starting position. However, I see a lot more opportunity here at Rox. It is a 3.5 kilometre ore zone. It is high grade. And when you look at that valuation metric, we're trading well below our peers. And the UME district, I believe, is quite undervalued. It hasn't seen the drill bit for a number of years. So when you look at the historical production here at UME, it ceased in the mid-90s, and since then there's been very little exploration. And the most recently, there's only been one company that's done any significant exploration, and that may be known as Spectrum Metals, which many of you may be aware was acquired by Rox Resources for a significant sum a few years back. Now, Ramelius are just starting up the Penny West deposit, high grade, narrow vein, very similar to the UME district, and we see a lot of potential in our ground in around this area. And the UME project itself has a steep history of high grade gold production, with nearly 700,000 ounces produced over the district, many of that coming at well in excess of 10 grams a tonne. And when you consider the gold price was $400 an ounce in that time, and we've got a significant mineral endowment of nearly 4 million ounces, there is a project that will be here in the future. We've conducted 100,000 metres of drilling to grow this resource over the last 3 years. I've recently joined the company about a month ago, and what I see as a development opportunity is a potential to grow the resource base, and as well as the production numbers that we've outlined at our scoping study. And it is a high-grade underground mine. At 4 million tonnes at 5 grams, predominantly from underground feed, I liken this to very similar to Silver Lake's Deflector deposit. Very similar mining characteristics, production rates that I think we can upscale to the similar numbers, as well as producing a golden concentrate. The modest capex of $99 million is well funded, even at our current market cap, and a mix of debt and equity would easily be able to cover that off. And it does offer an attractive valuation. At $99 million pre-production capital, the NPV in the scoping study is about $300 million, so there's a 3-to-1 valuation gap there. When you have a look at the attributable NPV value of the project and Rox's market cap, there's a 7-to-1 valuation increase. What I see here is the ability to go further on these economics and improve the project again. At all-in sustaining costs of about $1,500 an ounce, we're showing that there's over $1,000 an ounce margin. Now, if we're able to upscale the project, increase the productivity, get the project up to 600, 700,000 tonne per annum, I see those costs coming down, and I see that ounce production number going up significantly. And producing gold in concentrate is quite a de-risk method for advancing the project. It's something that I've had a lot of experience in, negotiation of offtake contracts and reducing the capital requirements for junior companies moving forward. It's a high quality, low arsenic concentrate that will be produced at UME. The project has the historical information on the metallurgy that shows it'll produce a concentrate of around 40 to 50 grams a tonne and an arsenic percentage of under 2%, which is significant when you start looking at the world concentrate market. Now, concentrates aren't something new. It's something that contributes quite large to the world gold market, with 12% of total world gold production coming from gold in concentrates. Now, over the past 18 months, China has made significant regulation changes that do affect a lot of gold concentrate producers. Now, they've set limits in place whereby any concentrate over 6% arsenic will attract a 15% VAT charge. So what traders are looking for are low arsenic gold concentrates, and they are paying a premium for them to be able to blend down their high arsenic concentrates they have offtakes with elsewhere in the world. UME will fill a niche for that production, and in my opinion, it is probably some of the best quality concentrate that I've seen throughout my history, and I've been working in this space for gold concentrate space for the better part of 7 or 8 years. Some producers, not only within Australia, but also overseas, show that you can do this on both a small scale and a large scale. Some of the biggest producers in WA, Newmont down at Boddington, they've been producing a copper gold concentrate for a number of years and shipping it out. Fremantle. You've also got the Deflected Gold Mine shipping from Geraldton. Again, they're producing a copper gold con. Bardock Gold's up there, recently acquired by St Barbara. I negotiated the offtake contract there with MRI Trading back in 2021. You've also got Mount Carlton Mine in Queensland at significant scale. Now, we've talked about operations producing anywhere sort of between 50 and 100,000 tonnes per annum of gold concentrate. But if we look all the way down in Victoria, not far from here, down in Costerfield, there is a mine that's producing probably around 10,000 tonnes of concentrate and has been doing it for well in excess of 10 years. And Mandalay Resources have been highly profitable throughout that time. So when we start looking at the comparisons with Rox and where we are with our peers, if you just look at the high quality resource that we have, so the indicated and measured resources, we stand well out on an evaluation perspective. At $34 an ounce, it is a significant markup that is attributed to our share price if you start considering that to discover an indicated or an inferred resource is probably going to cost you in excess of $65 to $100 an ounce. So there is, when you start looking at reserve ounces and evaluation perspective, Bardock Gold was acquired for around about $150 a reserve ounce. So it does show that there is the ability to significantly upscale the value of Rox. And not only on a valuation perspective, but also a mining perspective. I've reviewed the scoping study. I think there is the opportunity to significantly increase our mine plan. We do need to drill out our inferred resources, but the recent optimisations I've had the mining team working on, as you can see here in the picture, in the green and the red show the scoping study and what's attributable in that plan. In those green and red stopes, there's 4 million tonnes at about 5 grams. In those gold stopes, I think we could potentially double the production coming out of that underground by drilling out the inferred resource. Now, do we really want to be producing 70,000 ounces per annum over 8 years, or do we really want to be compacting that time frame, mining it all out in under 10 years and significantly increasing our production footprint? We do have other options of increasing our cash balance. So the Mount Fisher deposit is something that we've expanded on over the last few years. It's got 180,000 ounces of gold, predominantly in supergene style mineralisation. What you usually find in these supergene areas is there's a high-grade feeding system. What we believe at Mount Fisher, it is a significant gold deposit, but it probably sits better within a junior company raising the money to specifically target that deeper mineralisation. We believe we'll be able to monetise that asset in the future, as well as the Mount Eureka deposit. So Mount Eureka is the northern extents of the Cannon Resources Mount Fisher East. We hold 10% of Cannon Resources, and we're currently selling that Kinterra. They're a private equity group that's bid about $40 million for the asset, and that'll be $4 million in our bank account come the end of the year. They've expressed an interest in the ground to the north. We've got about 35 kilometres of the basal contact, so I see that as a potential of fitting under their umbrella as they continue to explore for nickel in the district. So, as I've said, I believe Rox Resources has a fantastic high-grade underground resource. If you're looking at a mine plan in excess of 5 grams a tonne, you'll be making significant amounts of money within the current industry. And as I said, I liken it very similar to a Silver Lake deflector style mine where, you know, they're producing 750,000 tonnes per annum, about 5 grams, and they're turning out about $30 to $40 million a quarter from that asset. So I see a lot of upside when we start getting you and me into production and doing the same thing here. With the divestment of some of our non-core assets, plus the recent capital raise and the strongly supported SPP from our shareholders, we've got the funds to be able to conduct the feasibility studies, and hopefully within the next 12 months we'll be able to push this asset and be able to announce a maiden mining reserve. With our valuation metric against our peers, it shows that there's tremendous upside to grow this share price, and you know that's one of the reasons why I'm with the company here, because I believe that there's a significant project that we can unearth and we'll realise that value for all of our shareholders moving forward. Thank you very much, everyone, and we're over at the booth, and if you'd like a Rox Resources hat or pen, make sure you come over and see us. Thank you very much.